The Bangko Sentral ng Pilipinas, or BSP, is expected to cut interest rates by 50 basis points in 2025. That's according to the Bank of the Philippine Islands. The projection is lower than the 75 basis point cut earlier signaled by BSP Governor Eli Remolona Jr. Jun Kim has the details.
The Bank of the Philippine Islands expects the Bangko Sentral to begin cutting interest rates by April 10, possibly trimming up to 50 basis points this year, especially while inflation remains contained and the peso holds around 57 to the dollar. With a second cut, BPI Chief Economist Jun Kim says, trailing just before the fourth quarter. However, there are risks to the outlook that could affect the rate cuts. Looming risks include a one-week remittance boycott, intensifying global trade strains, and a resurging dollar. BPI is especially watching the April 2 announcement from U.S. President Donald Trump on reciprocal tariffs, which could spark stagflation in the U.S. and throw off rate cut plans altogether.
Politics will always be a risk. It's actually a risk globally. Favorable thing for us if we see this issue actually deteriorating. But for now, we're not really looking at the possibility of this affecting overall sentiment on the sectors that seem to be very promising.
One more risk, a planned remittance boycott by some OFWs from March 28 to April 4 in protest of former President Rodrigo Duterte's arrest. Estimates show up to 97.3 million pesos could be lost per day if the boycott gains traction.
Kaya bakis na ma-afford nila na hindi mapadala yung mga relatives nila, then that will clearly widen the current account position, negative position, and have some negative consequences on the exchange. It may actually even affect interest rates. Baka hindi makapag-cut si BSP if the outflow or the inflow is really dries up substantially. Again, it's a very hypothetical situation that personally I doubt it can be delivered or it can happen. Yeah.
The more important thing is the continuation of the economic reforms. Will hopefully, again, after the elections, will help drown out this noise coming from the ICC and the Netherlands.
Meanwhile, the BSP's scheduled triple R cut pushes through this Friday, March 28, a move seen to increase system liquidity without overheating the economy. The cut is expected to support lending for strategic sectors including energy, industrial zones, data centers, and medical tourism. But the rate cut window could close fast. BPI warns that once the base effects of rise inflation fade in the second half, the BSP may lose room to ease. And for now, cutting below 5% should be off the table.
Hindi rin safe if we reduce rates below 5. No? We will have all of these side effects again of overbuilding and overexposure in misallocation of resources, and inequality worsening if we lower our interest rates much more than 5. Much lower than 5%. No? So kung recession lang, BSP can continue and maybe stop at 4.75 or 5% on the.
Jun Kim, Billionaire News Channel.